Okay, good evening, everybody. Hope everyone's okay. Hope everyone can hear me. And thanks again for joining. You know what? I've actually kind of been caught a bit off guard. So let me just finish everything else. Just start. I don't know who A Watchman 1399 is, if you actually are someone that is tuning in tonight, but that message has a I don't know what, some sort of web address on it. Well, not web address, but wallet address. I'm not going to click on it. But yeah, I hope it all works for you. Anyway, let me just fix it. So what we're going to talk about tonight? Well, I think the elephant in the room, we are going to talk about the fact that we did have a particularly poor open to this week, market moving, unfortunately, back down to sort of 86,000, making a new low for 2026. And it kind of just begs the question, where really are we at within this cycle? Okay, I've got everything sorted again now. What's actually going on? Should we really start seriously considering that we're wrong and actually we have got further falling? Is there hope around the corner and it's actually just the market messing with us? We're going to try and just have a little bit of a sort of blitz through some of the charts, a couple of sort of news articles, mainly about sort of bullish and bearish indicators, kind of go through sort of those. I'd love to see what you guys are all thinking in the comments as well. We'll go through the usual sort of charts and webpage we go through, and then we'll have a look at some of the altcoins that we like to discuss. I don't know why I'm on the 3 hour there. Sorry. You see, this is what happens when you're running late. Right, but without any further ado, let's just dive into everything else. Don't need that on there. Okay, Bitcoin 3-day time frame, and this is what I'm talking about here. Well, let's just blow it up onto the bigger screen. We opened up yesterday's candle, actually Sunday's candle, with that move down to that 86,000. 86,482 is where my line is. Pretty good bounce from that. I've actually kind of said since that loss of the 94,500 that this was probably where we were heading down towards. We have gone and hit that. What I will say, only 4 hours to go. It's really decent bounce from that. But once again, back in the range. Okay, I mean, we didn't dip out of it for that long. We're just in this range. We've been in this range for pretty much 3 months now. And when we look at vector candles later, considering we're still in the range, we left some vectors on the way back down. I truly believe that we will go and retake those. They're in around about 91,000. So unless we lose 86,000, I mean an actual close below it, or we actually get above 94,500, the range is where we ultimately are. And on days like today or weeks like this week, pretty scary because we're down at the bottom when actually we should be getting pretty excited about that. And likewise, like 2 weeks ago when we were back up at 97, 98, we actually peaked, very excited, and really we probably should have been prepping ourselves for this move back down, but that is where it is. Bitcoin dominance does nothing. It is just moving sideways. Nothing really to say. Ultimately, Bitcoin is still in control of this market. It is 60% of the market, and until we lose 57%, altcoins, some may pop, some will drop, but generally they're just going to follow whatever Bitcoin does. And so that's where that sits. Total 2. Am I right here? Yes, I am. Total 2. We had that move down. And again, I don't know why I don't keep this line on here. Let me just hit the save button after this. But that kind of level there of whatever you want to call it, 1.16 trillion or 1.15 trillion, fairly decent level. And it kind of gives you a very similar outlook to what Bitcoin has been doing over a similar period of time. Okay, it's a bit more wiki because there are 21 million altcoins out there. But generally, stuck in within the range. We go up, we go down. And that's just mirroring what we're seeing with Bitcoin dominance. It's been in that range in and around 59%, hence why Bitcoin is controlling what the market is doing. And whether you are a believer in a bear market is coming, if that's a term we're using now, or we're still in the bear market, bull market, whatever you want to call it, until we break those levels, altcoins are really going to struggle, in my opinion, against Bitcoin. Until we break that 57% and we start to see that sharp drop down, then ultimately they are just going to be knocked around by Bitcoin. And as I say, on days like today, I'm looking over on the right hand side, pipping up 42%. Fantastic. Okay, you get the outliers like that. But generally, they're in and around the sort of the 1% up, while Bitcoin's sort of treading water at the moment. When Bitcoin drops back down, we start to see the altcoins drop a lot faster, a lot further. And then we get on to BitTensor, which still for me is looking, I don't want to use the term terminal, But as an example of altcoins, are not looking great, in my opinion. Yes, there's an argument to be had that it's in a range, just like just like Bitcoin is, and we're at the bottom end of that range. I absolutely get it. We've been in a decline since Q4 of last year, very similar to Bitcoin. But the thing that stands out for me is this. Well, the Gandalf level, it's probably moved down to $300 right now, but we just cannot seem to sort of catch a break above that. And then, given the fact that it is an altcoin, we're just not really seeing that momentum driving through. And any positive moves up are quickly sold off, unfortunately. And as we can see, it kind of more feels like an extraction of money rather than as trying to make it. And I alluded to it last week. But we have been in decline for pretty much 2 years now. 9th of April 2024 is when we set our all-time high. Ever since then, it's been lower highs and lower lows on the way back down. Granted, we haven't formed a lower low yet. We'll have to wait to see what happens here. And in theory, we've got to close on the 3-day at least below 183 for that to continue. But it's only $50 away from where we are. It's more than that, $65 just to the Gandalf line. So I'm not ruling it out. We'll have a look at BitTensor a little bit later on. Evening, everybody. Sorry, I'm finally actually looking at the chat as well. Okay, 12-hour time frame, having a look with some fibs and with the liquidation areas. And you can see, actually, this liquidation zone that we had drawn up, I've graded out now because, look, this moved down. Absolutely took it to the very bottom, okay? 86,000, wicked it down, came back up. And at the moment, you can't see it because I haven't bothered to move the fib across because don't know why I did that. But this is the 1.414 at 88,000. You can kind of see we've been stuck underneath that line. That line would effectively extrapolate out like this. We've been stuck under that line for the last 2 days. We've sort of bounced back down. We've flashed down. We've bounced back up, and it's this level that's kind of holding us back. Whether we're just lacking the volume to get through, or actually what we're starting to see is sellers now starting to step back in after an initial bounce. We'll have to wait and see. But if you're wondering why 88,400 is so special, it's the fib. That's where it is. Now, in terms of liquidation levels, we don't really have much. 98 to 99.5. It's not even that big a level when I went on CoinAnk, but it is the closest one to the north for us. And then we've got the 82 to 84,000, which has been building for some time. This one at the top, I should add, it didn't start over there. It actually started here. So it really is it's not been there. It's not had the history of some of the other ones. Whereas that 82 is all the way back to, it actually started technically back in November, but we'll start to wick through it, which ate through it, and then it's been built up since. But you can see early December, this one has been sitting there waiting to be tapped back through. Not quite had that yet. But the battleground's there. And then, I'll stand by it. If we can finally break above 1.414, I'm going to say the 618, 96,600. That's going to be the level that I will be looking to kind of target. That's going to tie in with some EMAs we'll have a look at a little bit later on. That's going to continue to make sense as in working from the bottom of this range back up to the top, and we're going to sweep some vectors on the way. So again, plenty of volatility for those that do want to perp trade to actually take advantage of. But if we then lose, look at the other side, lose 86, I got to kind of question what's holding us back from basically this low down here of 82, but certainly that liquidation box there. And I suppose you've got the 1.272 at 83,000 dead. Anyhow, in terms of fear and greed, yeah, it feels a long time ago now that we actually got back to 50% on the F&G. We were down as low as 20 yesterday. We're back up around about 29 after a pump yesterday, but Sunday's activity took us back into the extreme fear. And you can kind of see, I put this on the 3-month chart. So this doesn't even take into account the fall from all-time high, because all-time high was the 6th of October. It doesn't even take into account the sort of cascading liquidation that happened on the 10th of October. This is actually only from the end of October, but you can see we have spent 6-7 days above 40. vast majority of this has been, I mean, I don't know, I didn't bother counting them, but quick count, can we see? There's going to be 11, so probably 70, if not 80 days has been below 30 in that borderline extreme fear kind of area, which again, you know, given we're supposed to be in a bull market, kind of feels a little off, if I'm being honest. We're about next time we have one of these, although I will be here on Friday, which is actually the 31st of January. But for those of you that don't tune into those, this is the last opportunity we get to look at Bitcoin. This is the quarterly at the moment, but obviously a bit of time to go on that. But if we go down onto the monthly, January is a bit of an interesting one because we had a period which it was pretty heavy red. And then, you know, since 2020, it's generally been green. We are technically green at the moment. Yes, there's all sorts of things to consider, like tax returns and everything else, which people may just be ultimately having to sell for or what have you. But I used to put a lot more weight on the monthly returns, but I think Rectember, you know, October, Moon November, Santa Rally, we were all expecting certain things based on previous cycles, previous years that didn't come into fruition. And whilst I'm not, you know, ready to say we need to throw this out, then I just think we probably need to step back and take it with a pinch of salt. Maybe a more accurate sentiment is the Bitcoin ETF in or outflows. And if you look on the far right with the total, you know, it's 1.7 or $1.5 billion worth in 5 days, 5 trading days. With the only stopping yesterday with a net of 7 million or just under 7 million in Bitcoin purchases, which in the grand scheme of things, you're talking like 100 or so. So, you know, not looking great in terms of where sentiment currently lies. It only does the last 3 weeks worth of data, but for those of you that have been following on through December and January, you know that actually it's probably been more heavily red than it has been black. But there are just random days like the 14th of Jan in which $840 million worth of Bitcoin gets purchased in a day. So I can't say that we've had 3 full weeks of selling on the IBIT BlackRock ETF, but it's just something to, sentiment seems to be that there's a lot more volatility within this. We're not going up constantly. And it's hard to see on this graph here, but you can see we have been trending down. Net totals was about 63 and we're down at 56. So, you know, we've lost pretty much 10% in that time. So it's a fair move. We can't ignore that. And then we get to Bitcoin on the weekly, and I'm going to need some water. Sorry if my throat's a bit dodgy sounding, but I'm still recovering from whatever illness I had over the weekend. And I think this is starting to take a picture where we'll have a look at maybe a bear output and then try and turn it into where the bullish output is before we then move on to some of the other charts. But just before we dive totally into the bear, we can see weekly timeframes that actually that $86,000, which is the white line level, fairly good level. Previous resistance back when the tariffs were really taken into effect, and we struggled to get back through it, knowing that that's actually quite an important level. And then actually all of these drops that we've had on the weekly timeframe since November, it's 86,000 that's held us. Yes, we've wicked down to 82, but we've been brought back up. So 86 seems like a very important level. And we held it. You know, we have held 86. And as long as that holds, my argument still stands. As very simplistic as it may be, you know, as long as we hold support and get rejected at resistance, we'll remain in the range. It sounds obvious, but it is obvious. And because it's obvious, there's an opportunity to be had there. And so that now that we've had that bounce, we might linger around here a little bit. But for me, the most likely outcome is a retest of, well, on the weekly, it's on this one anyway, 93,787. Let's just call it 94,000 for cash, and a move back that direction. So, you know, we've had this move down to 86,000. It held. It's still keeping us, as I said, Friday, Tuesday, every other day, making higher lows. So we're still in that uptrend, regardless of how far this may have dropped, and we will talk about that later. And as long as we can hold that and stay out of the sort of April tariff kind of range, then we have to say, well, you know, structure hasn't broken. Sentiment might have, but structure's still keeping us here. What is keeping us here in terms of the actual process? Is it ETFs? Is it institutions? Is it governments? We can all have a little guess, but we don't know whether or not that's true. But 86,000, you're someone that can't really look too much at the charts. That's what I'd be just eyeballing up. Have we stayed above 86,000? If we haven't, let's start opening up TradingView and start to see what's going on. However, there is the elephant in the room when we look at this, and that is this move up. Okay, so let's just get rid of these. Don't need these now. Just going to distract. So even on the weekly time frame, we've got the 50, we've got the 20 EMA. Okay, they have now crossed. All right, that's not a good sign on the weekly time frame. I will go back in a second and show you that pretty much only happens in bear markets. Okay, so if you're someone that believes in the history, may not be exact, but it's certainly rhyming, whatever that saying is, first indicator there. Okay, they've crossed. So we need to act quick to uncross those. Okay, we need to just negate that, get back above, start having price going up, sustaining going up. So these EMAs can finally start turning around and heading north and uncross themselves. And they won't uncross next week. Probably take 4 or 5 weeks, even if price does move up, because we're talking about 50 and 20 here. But we need to start seeing that element move up. But that's not even the worst part about it, I'm afraid. The worst part about it is price action after meandering underneath the 50 EMA for 8-9 weeks. It finally had that move up. We knew it was going to retest the 50 EMA. It shot straight back up to the 50 EMA. Just so happened that the 20 EMA was there at the same time. It's gone and collided into those and rejected. And, in terms of a rejection, there is some significant sell pressure at that $98,000 level, because look at the length of the wick. I mean, it's not the biggest wick we've seen, but the wick to the north is longer than the body. So it shows you that actually the sellers are ready at that level, and they have done so. And then for those of you that haven't seen the past couple of times I've done this, when we have a look back at previous beginnings of bear markets where people are still unsure whether or not that's happening, we have some sort of all-time high, price comes down, breaks the 50 EMA, moves around a little bit, and then at some stage it will retest the 50 EMA, but it'll also retest the 50 EMA when the 50 and the 20 cross. Just so happens that this happened at the same time. So bear that in mind. We go back now. Oops. So this is 2022. So at the top in 2021, breaks down, goes through the 20 and the 50 EMA, ranges around a bit, retesting the 50 EMA. Then we get to the 50 and the 20 crossing, moves up to retest it, and a strong rejection back down. Okay? I don't think anyone can deny it. For those of you that were in RT, this was the area. Okay, I think most people actually got out in February, but this was it where it was right. The narrative has shifted. We have got to change our stance on where we are. End of March, beginning of April, we got to go. And then obviously 2022 wasn't a great year in terms of major news disrupting the market. But then we go and have a look at 2018. So we've got the 2017 top. Price moves back down, comes down, actually uses the 50 EMA kind of as support to start off with. So the 20 holds us back. Then we lose the 50, come back, the 50 and the 20 cross, we reject from it. We find our bottom down at 3,000. Now that one took a bit longer to play out, I accept. And, most people knew the bear market was in way before that. But the sentiment was still there. And as I say, another cross of the 20 and the 50 only ever really occurs in bear markets. It did ever so briefly back in March of 2020, and you can see we had this huge drop off, and this is what I meant by it's going to take 4 or 5 weeks even with sustained growth. So we had this huge drop off, the cross occurred, and then look at that growth, 6, 7, 8 green candles in a row, yet it still took 1, 2, 3, 4, 5, and then the 6th candle for that to cross back over. Now, kind of a mini bear market across the world, across all markets back then, but yeah, you can call it an outlier. I think there's logical reason as to what happened there, and I think Bitcoin did a very good job of turning that around, although obviously certain increases in money inflowing into markets certainly helped. And then we get to 2013. So, another market top, price moves back down, holds the 50, retests the 20, then we come under, we have the cost of the 20 and the 50, market retest, and then we see that further drop back down. So in the past 3 bear markets, that's exactly what's gone and happened. Okay, it's not been mirror for mirror, but the sentiment, you know, when we're looking for checklist of things, those have all occurred. And that's what I worry, genuinely, that's what I worry about at the moment. I will go back to the fact that we haven't managed to hold above 50 EMA. And for those of you that remember last time I threw on some other EMAs, let me just find them. Why can't I find them? I think it was the 100. It was the 100. It's getting a bit messy here. Apologies. Let's hide the 50. And that's what I'm going to say. You know, right now the 100 is holding us up. So we're still making higher lows. 100's holding us up. And that 86,000 has held strong. So it is a bit of a mixed message in terms of where we're going. But I really think we need to consider that move up to that 50 EMA and 28 EMA with the cost and the rejection from it. We've got to be on the final straws now. You really need to take that 86 level seriously, if not for just the fact of support and resistance at 86,000. But now we know that it's the 100 EMA that's also holding us up at that same level to give us that clue there. And I think if we lose this and we don't actually take some, maybe positive, that's maybe not the right word given what will be going on in the market, but some necessary steps to preserving portfolios, I think we might be in a bit of trouble going down the line. Anyway, looking at some of these, so there's been very clickbaity news articles here, and they're only like either today or yesterday, so you'll be able to find them on Cointelegraph here. But the thing that I'm not necessarily bothered about is 66k, the next price target. I'm more bothered about Coinbase Premium stays deeply negative. And so what they're effectively saying, which I'll try and find the line here somewhere, is the Coinbase Premium Index, which tracks the price difference between BTC on Coinbase and Binance, flipped red mid-December 2025, dropping as low as 0.17. The last time the index did this was December 2024, which I should have had the chart for that. December 2024, before the sort of the inauguration dump, if you will. So the Coinbase Premium continues to drop sharply and widen, indicating significantly stronger BTC selling pressure on Coinbase compared to other exchanges. So we're talking about the US here. I'm sort of suggesting that there's a continued sell pressure from the US spot flows. Don't forget that Coinbase also controls is the inflow outflow for the ETF. So, you know, some really big players utilizing that, and it's saying that actually Coinbase is selling a lot more BTC than the others. When this last happened, we had a move down. They're then suggesting that 66,000, if you're wondering where they came from, that's basically where the price was when Trump won the election. They're saying we'd be looking, you know, for a retest back to there as a minimum. What is nice to see whilst we're talking is we're at 89,000, so we're moving up quite nicely today. Which I thought gold's moving strong as well, so I just caught that. Anyway, it's a different article. Then we kind of have a look, and again, the title for this one's crashed 30% after the last yen intervention. That's not the one I'm looking at here. I want to scroll and take you down to Bitcoin on-chain metrics, reinforced bearish outlook. Now, let's take on-chain data with a little pinch of salt, particularly if we're trying to prove a bear market case. And the reason I say that is on-chain didn't help us identify if the top was in. So how's it going to help us really confirm that the bear market has started? Well, there's a difference between notifying where the top is. On-chain certainly showed us that we were in a bull market for the last couple of years. It just didn't fire any tops if you're one who believes the top is in as of the 6th of October. But we may be able to get just a further indication of what sentiment is just by having a look at on-chain metrics here. So the couple of ones that they mentioned. So we've got the new pools, which is the net unrealized profit and loss. And I only mention this because I'm going to talk about realized profit and loss in a moment. But we can kind of see on this chart here, as it's been rallying up, it has been climbing. It's been making lower highs, but we're starting to see significant dropping off. And so new pools falling. It is still well above zero. So the majority of the market is still sort of maintaining an unrealized profit, even after the drawdowns that goes on. But it's kind of said that actually the past cycle, Bitcoin's bottoms tends to form when the new pools turn negative. So the fact that we're moving down, suggesting that actually we might be on that shift. And if I bring this chart up again, you can see from 2022, I'll have to get the pen out here. So 2022 is here. Oops, no, I can't. Why won't it let me draw on this? 2022 is here. Sorry, if I enlarge it, I can't draw on it. But look, it didn't go negative until, you know, right towards the end of this drop down. It does take a while for those unrealized profits to be effectively eroded. But the fact that there is a move down and it's lower highs, lower highs, lower highs, we've got lower highs, and lower highs with a move down, potentially suggesting that's the direction that we're moving towards. Similarly with delta growth. So delta growth tells me what it is here, so I'll just bear with me so I find it and get it correct. Basically compares market value with its realized value. So a drop below zero basically is suggesting the network's aggregated cost base is signaling a market that is cooling and moving away from speculation and rather into accumulation. And again, you can kind of see market top was here in 2022. We broke down to zero. Market top was here 2017. We were on our way down, broke into zero. 2013, okay, it took a little bit longer. We can see where the market broke. And even here now, you know, we are below that zero level, suggesting that maybe we are in a bit of an accumulation kind of phase. And then some of the other articles, again, all from this week, and I'm not suggesting that just because it's this week, it must be true. Entering an early bear phase, 84 becomes key support. I suggest that is 86, but they've obviously drawn their lines ever so slightly differently. And again, now I want to have a look at realized profit and losses, okay? And what we can actually see is from the October high, realized profit and loss have slumped massively, and we have dipped into the red. So people are at a loss. We're realizing losses. People are selling lost positions, okay? Typically that happens when the market is very spooked and on the way down. And if we kind of have a look again at 2022 versus where we are now, this was 2022. We saw that move down into the red. And again, this one only goes back to 2023, but you can see we've already started to dip into that red down here. And then we don't really use it that often, but the MACD, 2-month time frame, so we certainly don't use it that often. Again, previous times we've actually dipped from green into the red. It has signaled the bear market. And again, we've just printed our first red candle, suggesting that is where we are heading. I mean, there's a lot of evidence I think that can help support. If you want to believe in a bear case, then I think there's evidence out here for you to do it. I will say right now, just kind of general advice I normally give, there's no point, in my opinion, selling now because we're so close to that baseline. We've bounced actually off that baseline. We might as well wait and see how this move plays out. And even if it turns around here, when we won't know it turns around because we'll all think, oh, it's just a slight pullback before we move up. Let's actually wait for a close below this level, and then we go. And some of you may say, Harry, if you had only sold when you said you would, it would break at the 50 EMA, you'd be fine. And that was obviously the plan. But we had to wait for confirmation. I said I'd always wait for confirmation. And since that confirmation has happened, it's really done nothing. You know, 2 weeks after we lose it, we're down at 86. And then since then, that's kind of where we repeated ourselves. So every time it feels like there's a great time for you to get out, or we're just on the precipice of confirming it's going to drop further, we turn around. So it is sometimes about just holding your own and making sure that you don't react right now. I mean, selling at, well, 89 might be a great price, but back on Sunday when it dropped to 86 might not have been the cleanest exit for you. Right. Oh, here we go. And for those, I know 4-year cycle is dead apparently. Okay, 4-year cycle. Nobody wants to hear about it anymore. It's now the 5-year cycle, the ISM, which I would argue. I know it has been bandied around in RT for a bit, but I would argue it's not been very widely spoken about until November. Then suddenly people started jumping on board with it. And in my opinion, whilst it may be true, I think people have just latched onto a 4-year cycle didn't work for me. And notice I said for me, so I'm going to try and find a justification as to why that might be. But I actually still stand by the fact that we did hit an all-time high in Q4 2025, which is what we expected it to do. It may not have gone as high as we wanted. And we've started to see the market fall away. And so I just started to draw this on today, which is why I was running a bit late. And you can see none of this has moved over, to say, well, actually, are we in the red right now? Okay, have we got there? Now, that's the top of the red box needs to be. We break above that. No, this we can delete this chart. Trust me, I could do with the space. But until we do that, this may well be the case, unfortunately. And I'm just going to have this on there as a little reminder to me that it might not be where we want it to see. Now, that being said, and I'm probably depressed most of you, let's actually have a look at the bull case, because I still think there is an argument for the bull case. Now, my bull case might be slightly different in terms of how the bear market plays out. And I have a chart somewhere. How have I gone flying past it? Is it this one here? Sorry, I do have a chart somewhere that I'd drawn all over and want to talk to you about. I don't know where it is. We'll have to come back to it. I'll create it afterwards. But there's definitely an argument for a reversal. Now there's levels that we have to get through. I've identified those plenty of times. But just like we looked at on-chain data to suggest that there's a bear case, there's some on-chain data, but there's certainly some TA out here to suggest that actually there is a bull case. Now, this isn't necessarily in this article, but elephant in the room, the rest of the markets out there, both risk on and risk off, are all experiencing significant runs. Now, you could argue the S&P and the Nasdaq are pulled back slightly, but they're still at their highs. Commodities are absolutely flying as we speak. But for some reason, it doesn't seem to be working with crypto. Maybe because crypto is following its own 4-year cycle. We'll put that one there. But there's an argument to be said that, well, it's just a matter of time. And actually, a lot of TA and fundamentals is suggesting that, we're just building up, and there's a bit, someone's got their finger over the hose at the moment. And, once that goes, or finger in the damp, it's going to be a bit of an explosion. And so there are some interesting sentiments out here. Now, this one caught my eye. Bitcoin's most accurate bullish signal hints at a BTC price reversal. This is the type of article that I'm going to click on, because I want to know what the most accurate bullish signal is so I can use it. I'll tell you what, none of you will be able to guess what this signal is, because I have never heard of it in my life. The signal that they're talking about is someone has spotted the appearance of a bullish cross involving the stochastic RSI, not of any crypto, of the United States 10-year Treasury yield and the Chinese 10-year government bond yield against Bitcoin's weekly chart. I didn't even know how to draw that up on my chart. Well, I could have worked it out, but I just couldn't be bothered in the end. But this is what it looks like. So down at the bottom, you have got the US 10-year against the Chinese 10-year, and then they've overlaid Bitcoin's price action. What they're effectively saying is, look, the US 10-year versus the Chinese 10-year is at, record lows, and we've started to see that bullish cross. And every time that's happened, it has coincided with a run up, a significant run up. So when they say most accurate, this has only flared 3 times, which a lot of 4-year cycle TA has flared 3 times. So whether or not it's the most accurate, but still, there's sentiment there to suggest, well, okay, that's right there. And they put a nice green box to suggest where we could run. 250,000 for those of you that can't quite see. But actually, that's not the one that I was interested in. As interesting as that one was, it's this one. It's the Dixie. So the Dixie has now dropped into 96. So we've had a break of it. And I know it was posted out on Telegram, but those of you who might not have seen it, why is that? Oh, right. Here we go. Wrong chart. So for those of you that I've drawn this long-term trend line for the Dixie, going all the way back to like 2008. you know, we're on the monthly here. We have been bouncing off it. We have broken through it. Now, monthly time frame, there is the 200 EMA in the way. So we may see a bounce, but that's not what I'm here to talk about right now. We have broken that major trend line. We finally lost it. And this is what this article is sort of alluding to. I can find it again. And it's saying that actually, you know, if we can now make that drop below 96, the past 2 times the Dixie has done that, we have seen some significant running from Bitcoin. So the last time it did it, it went from 10,000 to 64,000. It did that in 9 months. Any of you that were around at the end of 2020, beginning of 2021, you'll know how wild a time that was. And then for those of you that were lucky enough to be around in 2017, when it did it again, it went from 2,000 to 20,000 in 6 months. Difficult to kind of see on this chart just because the colors is used, so I have drawn it up. This article here covers the same thing, which is this Dixie drop in here. So they're the 2 articles, and this is it. Okay, so at the top we've got Bitcoin's, sorry, we've got the Dixie, and on the bottom we've got Bitcoin's price action. If it's looking ever so slightly different, it's only because it's on the linear chart. We can see that we have broken 96 at 96.1. So we've broken 97. We're not quite broken 96, although we're very close. For now, just unhide these. This is what I'm talking about in terms of the movement. So back in 2017, it broke down through that level. It came back and retested it, but ultimately it broke through, held. And that entire move down was the move up, okay, from 2,000 to 20,000, 10x. And then, as I said, we had this move down. I mean, obviously, the circumstances of why the dollar broke, because of just so much was introduced in 2020. We had that massive move down, and again, Bitcoin absolutely flew 10,000 to 64,000, so about 6-7x in terms of price movement there. And the argument is, look, we're about to lose it again. We don't lose it that often, and should that be the case, and even if Bitcoin only gets a 2x or a 3x, it's all-time high territory. That's the point, isn't it? We actually only need to make another 50% really, and we'll be a new all-time high, and the bull market continues. So I think there's certainly something there to look at in terms of sentiment and movement of where price is going. Obviously, we've got the fact that we have managed to hold the 86,000 level. We are continuing to make higher lows as we go up, and I suppose technically higher highs, and that hasn't been broken yet. But I will, you know, not dampening it. The journey, the route for us to get there on the weekly is that level, that level, that level. We'll go through what these levels are in a minute. That level, and arguably maybe that level, and then that level. You know, that journey consists of 93.5, 96.5, 100k roughly, at 109,000 we talked about for months, 118, 119,000, and then, well, all-time high on the weekly, it's only 123, but we know it to be 126. So that's the journey, that's the route it's got to take, and that's gonna take time. I mean, it can do it. Look, you know, obviously these levels weren't as strong back in 2025, but Bitcoin can turn around fast. It really can flow, and I think people kind of forget that. If I can find my price range, you know, wick. So this move up here was a $40,000 move, 50% increase. So it can do that. $40,000 move from now, that's all-time high. You know, that 88, that'd be 128,000. So it can do it. This took 1, 2, 3, 4, 5, 6, 7. Took 2 months. Okay. So absolutely can. There's just things in our way. And it's not what it does as soon as it hits this, it's how it reacts in and around those is what we need to look at. Now, one of the things that may help is tomorrow. We've got FOMC day. It seems like it's an absolute foregone conclusion that the rate isn't changing. And that might be a fly in some people's soup because people were kind of hoping of back-to-back rate cuts. We had one. and then we've kind of stalled a little bit. We have one or we had two? I think we've had one. And this is a 97.2% chance that we're staying the same. So it is going to be a shock tomorrow if something turns around. We haven't really resolved what's happening with the Fed chair position yet. I think old Trumpy's been a little preoccupied with trying to conquer other nations. But we might have volatility tomorrow, as we always do on these days. But generally, it feels like the rate's probably going to stay the same. Now, had this been any sort of previous discussion, we might have made the argument today's price movement is just a move up ahead of rates staying the same, but they're already kind of factoring in that rates are going to remain the same. So I don't think that's necessarily a shock. I can't see them putting them back up, that's for sure. So I think after a little bit of tomfoolery when the rates come out for the next hour or so, I think we'll kind of find that the market's settle, and this is another reason why it's driving it up. I don't think there's anything really to go through on this one, and then we're back here at some final charts. So we will now have a look at some of these charts once I get these levels correct. Sorry, these are all from Friday, so apologies there. But even some of these lines from Friday kind of played out. I mean, it did turn around pretty much on this level here, and the move up to reclaim this untouched vector zone, which basically is 90.5 through to about 92,000. It's actually only a 4.5% move from where we currently find ourselves. I think that's perfectly achievable. And even if we only recover up to the halfway in the 50 EMA at 91,000, it's a $5 move from the base that we found ourselves. So a good position to find ourselves in. But when we actually now just kind of have a look at it, let's get rid of some of this off here. Turn this up a little bit. Again, this is the range we're in. I mentioned even on the daily, as long as we stay in this range, we're recovering vectors all day long. Whether or not this is a continuation of a bear flag, people have talked about this bear flag for a long time. I cannot deny it is there. But until we break out of either side of it, it's just a channel we're ranging in. And now that we found that bottom, as I say, the odds are we're going to find that move on the way back up. And I kind of see ourselves maybe I don't know when this 200 EMA is going to be, because how long it's going to take to get there. But it's going to come down in the next sort of, I don't know, 2 weeks or so. It's going to be sort of low 97s. I feel like we will work our way up towards that level. If we leave vectors behind on the way up, chances are we're going to come and take them out. So it'd be nice for us to just get nice steady volume climbing on our way back through. But if you had played this range for the last 2 months, you've done very well. Given we're at the lower part of this range, there may be some opportunity for some sensible entries to be found. It doesn't mean we're going to go straight up. We can kind of see in sort of December time, we kind of went sideways for a little bit, but we ultimately made our move on the way back up there. Now, we are still below a few of the EMAs. They're fanning out quite nicely for us, so we can't really deny it. But on the daily, it's been a bit of a mess, the 20 and the 10, if I'm honest. Even the 50. So I take them with a pinch of salt. The 10, I suppose, did hold us back last time we retested it, but neither here nor there in terms of what they can do. I'd be more interested in that vector zone and then this channel here, the top side of that, dropping down to the 4-hour time frame. We kind of see, the RSI bottoming as well, starting to move back out. Now, we do have the 50 at 89,300 that does stand within our way. We're not really touched the 50. We had an attempt to get up to it when the 50 and the 200 crossed, and we rejected from that. So, we could see a new battle here at 80 and a half, and then what the 200 does. But again, those vectors that we talked about, that's this zone here. And then actually on the 4-hour, we left another zone there. So plenty of room for it. And now we look at the 800 EMAs coming down, which beautifully kissed off this. That could be the level we target, still above those vector zones. So acting like a magnet, claiming through them. And then I don't know where this is going to be by the time we get there, but 96,000 could be a level to be played with. And again, I've probably said about 18 times, but there's a good move to be made there in terms of sort of movement from it. There's plenty of wiggle room on the RSI for us to make that move up. And as I said, you look back historically, pretty good indication of where things go on this. There was a bit of a bullish divergence, I suppose, here, which is starting to potentially play out. But anyway, hourly, I don't know if there's anything on this. Nothing really new. Again, fairly neutral on the RSI. Yeah, the EMAs, obviously they're a bit lower, but there's plenty of vectors there as well. I think, yeah, go down the lower time frames if you're actually looking for entries. But all looking good there for me. I'm hesitating because I'm trying to think of a different way of saying what I've just said, which is we bounce off the 86. As long as we keep 86, I'm happy. And for me, the most logical move now is up. That's it. We retest again. We should think about, if nothing, and maybe not a mass panic, get out of our, retest the top part of this channel. Sell the portfolio, go away for 6 months. But there's an opportunity for potential sidestep or short if we reject off some of these levels to the northern side of that range. And I think, as traders, we should be encouraging ourselves to have a go at trying to find those. Bit tenser. It's a bit tenser. I mean, to be daily time frame has found a bottom in and around that sort of 220 area after coming back down. RSI's got enough room for it to run up. EMAs are very similar to Bitcoin. There is a vector. It's not that far away. It's only at 160, which runs into below the 50 EMA. But you can kind of see the 800 and 200 at that Gandalf level. I mean, I talked about 315. It is bang on 315 or 314.80. Forgive me there. But the 800 and the 200 crossing each other, this is going to be coming back down. It's going to cause a nuisance on the way up. But I wouldn't rule out a move up. I think we might be able to get excited for some of these moves, but realistically, I mean, there's something to be made. It's a 25% move, $65, whatever, to get back up to 300, which is a good move to play with. But until we actually break that cycle and get above that Gandalf line 315, I honestly can't get too excited about price action there. I would be not, okay, of course we can always turn around the 50 EMA. For me, it's this level here. Let's call it 294. We've got to get above 294. We've got to take out this here. We've got to treat this as a potential rounding bottom there, this being the waistline, and as to somehow work through it. Yeah, okay, it's going to be an immediate battle. I get that. But until we start closing above that 294, I mean, I don't know what we're really talking about there. As I say, RSI's got plenty of room for it to move. So there is potential for that to happen. 4-hour time frame, it's going to look messy, but I mean, it's all kind of very similar. There's more vectors for us to run through. In terms of opportunities at the downside, of course, we can't rule that out. But there's a fairly strong bottom at 215. That sort of 215, 220 area, which I'd, consider watching for it. We developed my wick there. Loss of that, and we will have to unfortunately start talking about some of those lower levels. But let's not try to throw too much of a down on that and actually focus on 220. That's our defense. And it's whether or not we've got the momentum and the volume to get up to, I mean, here it'd be 270 for those vectors, but really wanting to challenge in that 295 where the 800 EMA, and that crosses just here. Some of the other ones I've been looking at, interesting with Monero, because it had that massive moves up. There was actually a news article that came out that sort of suggested that this move up was a $280 million hack that was being washed through it. And once that had stopped, that's why we started to see the price fall away. And it has fallen away fairly strongly. It's effectively lost all of that move there. Again, I'm on the 4-hour head. Put it on the daily. I think it kind of looks even worse. Just straight up, straight back down. I thought maybe the 50 might hold, as we've actually lost it now, and that's kind of our battleground. 486. I would say if the narrative resumes, then it's going to go up. There's something about privacy coins that they are working quite nicely. This was obviously massively overhyped, and even its move up from 230 to where it is now, no surprise it came back here. I talked about sort of coming back to this 50 EMA would not be unsurprising. Can it hold 450? Let's just call it. Find that base and start to work up from that, and then fine, you can sort of like take out this sort of hack move, and actually it's just a sort of a continuation of the medium up there, and just be like, okay, yeah, fine, it's working that range, and it continued to go up. But you know, the RSI has cooled off quite significantly within that. My long did close earlier today. I'll post it. You know, I'm only looking for like $200-300 each one. I think I got stung on the fees, to be honest. I thought I was closing at 200. I think I made about 155 in the end. Seems quite a lot in terms of fees, but I'll have a look at that a little bit later on. But I was just aggressively moving my stop on it, and then after the markets opened, it ended up closing. I haven't re-entered. I'll be looking for a new entry down on some lower time frames. From the 4-hour point of view, I suppose what you've seen here is it's kind of like range that's rolled away, and we've just started to slowly snake up, but we are getting held back by the 20 and the 50. And I wonder if actually the next move is that. So maybe looking for a long isn't the best position. But it's just such a weird one because it can just move like that. So if you are thinking of shorting it, I'd be very tight with any stop. You know, break of this 20 EMA on the 4-hour, I'd be thinking about bailing, because you know, could easily make that run back up to 500 and the test of the 50 EMA there. I have found both gold and silver on Bitfinex. So gold, obviously that was an easy one. That's PAX G. So I've been in along from that from 4,965. That still continues to go. And this is, you know, it's a hard one to find an entry, if we're really honest, because it just moves so wildly. It was kind of, I just entered it Friday it was, so it was around about here. There was no real logic. I mean, it did retest the 10. They came in on this candle. So but yeah, strong move there. And silver, I only found out about this one on Sunday. I have had the opportunity. Was it yesterday? It pulled back to like 103, whenever that was. I think it was yesterday. Yeah, this one down here, I was able to get in. I have actually been stopped out on this because, again, because I had such a bad entry. I had quite a tight stop. So I got a whopping $65 profit on that one there. And I don't have a new entry yet because it's just hard to get in. This candle up here kind of scares me. But it's consolidating a bit, so maybe there's an opportunity. But this thing is just moving so crazily. I'm not too sure where it goes. But I just feel like might as well ride the momentum. And now I know that they are tradable. And I don't really know what the volume's like. When, and these will correct, there's a hell of an opportunity to put in some good short positions there. So, because as we know, you know, go to the actual gold chart. This is not sustainable. It's not sustainable. As enjoyable as it is to watch, it is not sustainable. And silver's even worse. And so, you know, the 10 is at 82. It's $30 away on silver. It's just mad. And that's on the weekly time frame. So I think at some stage we will get some corrections. And then, you know, we've got some opportunities to try and short that now, which is good to see. In terms of everything else, Ethereum, sorry, we're on the weekly there. I mean, nothing's really changed in terms of the sentiment. We talked about it being rejected at 200 EMA again. The 800's kind of caught it like it's done in the past year, a little bit of a breakthrough. So my argument is that it's going to do what, you know, a move back up to the 800 EMA or certainly sort of 3,300 kind of level. There's some vectors there for it to have a go at. RSI is looking good enough for it to run. And if Bitcoin decides it wants to break 94 and continue north, then I'm sure it'll pull Ethereum up. It may not be at the same pace because this one has been a laggard all season, if you will, but certainly an opportunity there. Pippin, almost impossible to call, isn't it? I actually annoyingly had a look at this about 3 days ago and decided, nah, not for me. It must have been down here actually. Not for me. It's dropping. I'm just going to leave it. And then today, whopping move up. Everything in me says that this thing's going to pull back and retrace. If it comes back down to that 50 EMA, I might have to just put a long in, just with a really wide stop, or just a low leverage one, just to try and take advantage of some of these moves because it has some stellar candles. And as I say, up 50% today, 52%, if only. I hope Reese is still in on it. Down on some of the others. Others dominance not looking great. Others itself kind of in decline. And it's charts like these that just don't really fill me with too much hope in terms of old seasons. We are a long way off these. And even if you don't want to believe in the bear market, you think we're still in the bull, or the bull needs to continue, whatever it is, it doesn't feel like altcoins are going to be the ones that lead the way. Whether that through dilution, whether that just through retail getting absolutely wrecked, whether that through institutional, ETFs and institutional companies, etc., governments just wanting to hoard onto Bitcoin, and we don't see that clear rotation that we normally do. Whatever it is, I think it feels more stacked against, some altcoins like Pippin will fly, but generally most have struggled this season. I think Bijan's put plenty of posts that show that. Dixie has actually now lost 96. So one to keep an eye on, absolutely. NASDAQ. Oh, it's broken out of this range it was in, sort of 25,800, now in the 25,900s. We need to get to 26,300 for an all-time high. Whereas we are, 7,000 is basically an all-time high for the S&P. So we're not far off from that. As I said, gold, silver, platinum, palladium. Actually, platinum, palladium, what are you doing? Pulling back. But these are pulling back at least at 10 EMA. In terms of some of the other, in my pension pot, but some of the other stocks that are out there, SML has been moving up quite nicely. Circle, still moving down. This one, I'm definitely in the red on this one, but it is what it is. I do think this will have its day in the sun. Nvidia, I mean, it's staying in there. I don't know when its earnings will be. Probably end of this month, maybe February. Palantir, again, kind of in there, but the wrong side of this range at the moment. I want to see it bounce. Tesla, okay, it's moved down, but it's in the north side of it. QBTS. I dropped a ball on this one because I saw it a couple of days ago. 32. It's now down. It's down to 23 earlier. But it is what it is there. Coinbase declined. This one doesn't look great, does it? This one's a bit MicroStrategy, yes, and maybe where Circle's going to go, trending downwards, lower lows, lower highs. Rejected recently off the 50 EMA. Now it's lost its 800 EMA. Not really much support now until, well, certainly sub 200. MicroStrategy got to hold on to 150. Failing that, move down there. I assume this is Astrid. It's still one that I'm following. Obviously, RSI is quite high on it. It's had a bit of a move up. But as I understand from those of you in Discord, the liquidity is quite low. So, difficult to buy, I suppose, in volume, but also difficult to sell. So, interesting to see how this one actually moves. TauX, I don't know if anyone's interested in following that now, as we know where the money is flowing from that and into Astrid. And yeah, TauNew. I'm popped up today in Discord because it's it's being considered for delisted, special treatment on Mexi, which is basically a precursor to this thing's getting delisted due to lack of volume. Obviously, off the news of that, it had dropped. I don't necessarily want to end it in a bummer, but I had a look at this. So this is when it listed on Mexi. It has lost 99% of its value since listing on Mexi, which I don't know who needs to hear this, but I'm telling you now, this is a dead token. I appreciate some of you have probably lost so much value in it. There's no point selling. But if you have any thought of it's actually got a little bit, I got a couple $100 or whatever, move it. Just sell it and move on, please. This is not doing anything, okay? It's got 100x just to get back, 80x just to get back to where it was when it launched on Mexi, okay? That was 3-4 cents. It's 0.0005, and it was down as low as 0.0004 today. So yeah, I appreciate that might not be what some people want to hear, but part trading is understanding a bad choice, and I personally believe, whatever you do with subnets, whatever you want to do with Tau and other altcoins, absolutely up to you. But I'm telling you now, this thing is dead. Okay, it has no team backing it. It's a meme coin that has zero interest in it, zero marketing, zero meme ability, zero. I think I've said zero enough times there. Okay, I think we'll call it quits there. What was that? Oh, I didn't need that one in the end. And didn't need that one in the end. And that's just a Dixie. Okay. Right. Yeah, we'll leave it at that, I think. Appreciate everybody tuning in. Sorry. Bijan's put some 4-year cycles are very much still in play. Maybe 2-3 months, give or take, but they're still in play. Red candles for Taoinio. Looks like someone sold $5 worth. Yeah, well, I mean, that's the other thing. I didn't even bother going on Dex Screener. But the volume is incredibly low. So, yeah, look, Trading Pub will be back on Thursday. I'll be here on Friday. If any of you are single or just don't want to spend Valentine's Day with your partner, then there are still tickets available for the cuddle, and it's not a Valentine's cuddle. Don't be expecting that. I will do a talk, and I know there'll be plenty of other talks there. So book your tickets through the usual avenues for that one. Other than that, enjoy the rest of your evening. Enjoy the rest of your week. I'm always around. Anyone wants to reach out, ask any questions, need any assistance with anything. Sorry, Julia, for not being able to help you earlier on today. And yeah, enjoy the rest of your evening. I'll speak to you all soon. Cheers now.